gold is now up from what, $250 an ounce to verging on 2,400, and in non-US dollar currencies is up substantially more. So I would argue that a longer-term perspective is needed. I will grant you that the rate of increase in the gold price has certainly been more dramatic in the last 2 years. But people who have owned gold for 2 decades, like myself, will note that gold has done its job. And I think the fact that it has done its job in US dollars and more than done its job in foreign currencies over the last 20 years has done as much as anything else to increase activity in gold. Now, the very recent move in gold is unusual in the sense that normally gold price escalation is a consequence of individual investors or retail hoarding. The last 2 years, with the exception of the last 7 weeks, have been marked by retail dishoarding. If you look at the statistics around the ETFs, physical metal ETFs, you will see that for 2 years, retail investors have been selling gold, while at the same time, the central banks have been buying.
Rick Rule stated that there's been some debate over whether the last 7 or 9 weeks, depending on how you count, have seen a significant shift in retail sentiment. He noted recent trends in gold buying by central banks, suggesting that gold and silver might just be getting started in their move. According to him, while retail investors have switched from being sellers to net buyers, the net buying compared to historic norms in gold bull markets is still quite muted. He highlighted that the incentives for central bank gold buying, such as issues with US Treasury securities and the weaponization of the US dollar through measures like the confiscation of Russian assets and US influence over the SWIFT banking system, mean that central bank buying is likely to continue. Rule indicated that if retail buying starts to align with central bank buying, a real move in the gold market could occur. He also expressed surprise at the rapid price increase from $2,000 to $2,400, describing it as a significant move for such an old asset. Drawing from his experiences in the 70s, when gold prices quickly moved from $120 to $170, he suggested that the recent price movement wasn't particularly violent in historical terms. Rule emphasized that, relative to the broader history of gold price movements, the current situation might not be as extreme as it seems.
I need to admit that I've experienced enough volatility in my life that I'm surprised by the lack of volatility across all markets. For the life of me, I don't understand why the VIX is so tame. But I guess even an old man learns new tricks. I need to say too, Kai, that it's ironic, given that I'm so much older than you, that I have more patience. I have much less time on earth. And it's not like I don't want to be rewarded quickly. It's just that I've learned that rewards take longer to accrue, much longer to accrue. I think I said on your show in January, I don't own gold because I think it might go from 2,400 to 2,750. That doesn't interest me at all. I own gold because I'm afraid it's going to go to 7,000 or 8,000 or 9,000. And when I say afraid, I really mean that. The circumstance that takes gold to 9,000 US dollars is invariably a very unpleasant circumstance and would devastate other parts of my portfolio and usher in, I think, a much more challenging lifestyle. At my age, I don't want a challenging lifestyle. However, the set of circumstances that surrounds me suggests to me that I need to own gold as an insurance policy against the set of circumstances that would take gold not marginally higher, not to some psychologically important $2,700 number, but some substantially materially important move like $7,000 or $8,000 or $9,000.
Now you're teasing me with YouTube titles there, Rick. You know, now you're giving me numbers I can use. But to follow up there, like, you know, you mentioned the mid 2000s, gold at $250. Now we're at 24 or 23.50 as to today. In that context, is gold perceived expensive now? Like, let's put that a bit in context, because if I just look at the price, right, and I see 2,300, would you say that is expensive? And by the way, like in New Orleans at the conference, I think we've seen each other there as well. I've spoken to one of the bullion dealers, and they said, well, investors are selling gold right, or not investors, sorry, like bullion owners are selling gold right now to cover some expenses, because over 2,000, it is perceived expensive and a good sell maybe at that time. So putting that into context a little bit, is gold expensive?
I don't think so at all. The price in US dollars is, in a sense, a floating abstraction, because the US dollar is a very useful floating abstraction. I would note, too, that financial assets are frequently, in economic terms, so-called Geffen goods, which is to say that the price escalation in gold and other commodities, frankly, validates the narrative thesis that causes people to be interested in them. My suggestion to you with regards to disintermediation or selling by gold holders has to do with the fact that a lot of the gold holders are my age. Gold has done the job for them, and they are reaching the point in time in their career where they are beginning to liquidate some investments in favor of income-generating investments because they need the income. I don't want to sound too unhumble, but I don't need the income. What I personally want is the insurance against economic disruption in fiat-denominated savings and investment instruments. So for me, gold is an important and frankly growing part of my own portfolio.
Rick Rule addressed a question that seemed a bit cliché, but was relevant. If we can't replace or even match the number of older investors and bullion owners with